Good morning, everyone. This is Doug Campbell with Right Way Options in your morning market preparation video for July 6th, 2017. Well, yesterday turned out to be pretty much as expected. We ended up with an awful lot of choppy price action. We started lower in the day and here on the diamonds and ended up rallying back up. But if we look at a short-term chart, you'll see that that first push down in the morning rebounded, and then we really went nowhere. Just an awful lot of chop back and forth. And, that was really kind of predictable, coming just out of a holiday, a midweek holiday where we know a lot of traders will probably be taking some time off. And then we have a lot of economic data still coming up. Yesterday we had the FOMC minutes, but today we have a really full economic calendar, and Friday we have the big the big employment situation number, which the market always focuses on. So today on the economic calendar, we have the ADP report at 8:15. We've got international trade and jobless claims at 8:30. And we have a Fed speaker at 10 o'clock, an ISM manufacturing report at 10 o'clock, and then the all-important petroleum status report at 11, which there'll be a lot of eyes on that report. Oil supply numbers have not declined nearly as quickly as the market would like to see. And if we happen to get a decline, that would certainly help the oil companies maybe support the market a little bit. If we happen to get a surprise build in supplies, we could look for oil to move sharply lower again, causing more damage to an already kind of a spooky market. Now, when we look at the diamonds here, clearly the diamonds are holding up very, very well. But remember, there's only 30 companies here in the Dow. And there really seems to be an effort here to hold this up, to get people, to convince people to buy. And yesterday, this rally back is being, the legs are being cut out from under it this morning. We're looking at a gap down open down in here. Right now, futures are suggesting better than a 70-point gap down in the Dow. And this is one of the reasons why I've been suggesting, boy, not every day is a good day to trade. And sometimes setting out is the best decision you can make. Those who were just absolutely adamant about trading yesterday are probably going to have a negative result in their accounts this morning. And that's not something that is enjoyable for anybody, not even an outsider looking in. Nobody wants to see people losing money like that. Sometimes the best trade is to not trade. Sometimes the best position is cash. And I was warning all day yesterday of my concerns here in the overall market. Now, the diamonds are holding up, but when you take a look at the SPY, the SPY, the bigger index, 500 companies here, the SPY is showing, as soon as I get the chart, is showing completely stuck. I mean stuck. It's been here for a long time. We're not moving this index. All right. And now this morning, and here's the bad thing is we've been whipping up. Notice we gap up and whip up, and then we gap down and whip down. And we're doing that so frequently, and people are getting their accounts chopped up here because they believe that every day is a good day to trade, and that's just simply not true. Now, if you're a day trader, this has been a perfect market because you're getting extreme moves, all right? But as a swing trader, as a position trader, this has been a very dangerous market, one where your account gets chopped up if you're doing much trading. So I've been warning and suggesting keep positions small or don't trade at all during this market. And I've done very little trading in this market just because I don't want to give back what I worked so hard for at the first part of this year. So this morning, the SPY is gapping down here, completely wiping out yesterday's candle, complete reversal overnight, bang. And that's kind of been the nature of this market. And you know, the question you have to ask yourself is how many times do you have to be taught that lesson before you realize it's time to stand aside and wait for a better trading market to get back in? This is very punishing, and it will take all of your profits away in a very short period of time. Let's take a look at IWM. IWM also putting in that pattern of support, holding this level yesterday. Look at the reversal in IWM this morning. I mean, that is nasty, mean price action. And it's completely out of our control because it's happening overnight. When the market's closed, there's nothing we can do about it. So, again, I warned, there's good days and there's bad days. There's good times to trade and times when it's best to stand aside. And clearly we have been in one of those times where it's been very, very difficult moving forward. And I'm worried today because we're going to break some important support levels. You know, IWM breaking this support level. The SPY breaking down this trend. This trend has been in place for a long time. We're going to break below that trend today. If we put the 50-day moving average on here, we have a real risk of breaking the 50-day moving average today on the SPY. If we look at the Qs, the Qs already technically in a damaged with a damaged look here. There's a lot of paint scraped off of this thing, and it's not looking good. Breaking down below below the 50-day moving average, and now we're gapping lower this morning. If this support level right here fails, look for the Qs to make a quick move lower, all the way down to here. Clearly that would damage the overall market and something we don't want to see. So let's hope for a hold here. But if it doesn't happen, we don't want to be in the way. We don't want to be fighting this direction, okay? Let it occur. We can always buy stocks cheaper. Let them fall. We can buy them cheaper. We don't have to play when the market's doing this kind of this really heavy seesaw back and forth action, okay? So be careful. Be careful. Let's see, there are 13 companies reporting earnings today. None would be anything that I would expect to be a market moving type of report. Nothing going on there, but you always need to make sure you're checking the companies that you hold before they report. Don't be surprised by an earnings report. Let's see. Let's take a really quick look at the VIX. The VIX has remained down here in what I call the danger zone. The danger zone is when we get kind of complacent. Complacency is dangerous in the market. When everyone believes that the market can't fall, that's usually when it can really fall. Well, we're going to see the VIX gap up sharply this morning. I don't know where it's going to open, but it's going to gap up sharply. Now, the question will be, will there be sellers pile in this morning after the open? And I can't tell you that, but it's something we need to watch for. So be very careful, guys. I know I say that a lot, but I really do want to help you protect your capital because this has been dangerous. It continues to be dangerous. And those who relentlessly believe that every day is a good day to trade are getting punished badly. Don't play that game, okay? Don't play that game. Wait for good quality signals, good quality trades. Put the odds in your favor. Don't fight a market that's playing games like this, okay? Everyone, take care. If this is the first time you have heard or are interested in receiving this information every day, do me a favor and click that subscribe button. And if you're watching this on Facebook, please do me a favor, click that follow button so that you can be notified every day when I put this information out, okay? Keep in mind that Friday we have that employment situation number, and if the market doesn't really sell off, there's a very good chance it could become very choppy, which is normal ahead of that Friday employment situation number. It just gets really choppy, difficult to trade. So just keep that in mind as we move throughout the day. Okay, everyone, take care. Right Way Options, regular time today. So I will talk to you all soon. Take care now. Bye.